The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. The Trader's Edge. Now, Steve Rhodes.
Good morning, folks. Welcome to the February 21st, the fantastic Friday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. And let's make sure we have an extraordinary one. Now, the easiest way to do that? Well, it's to always remember that life is happening for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Now, today, you and I, we're going to go check on the circumstance of these markets. We're going to go figure out what those bulls and bears, what those buyers and sellers are communicating to you and I at just past 11 o'clock in the morning. I do want you to know that I am absolutely grateful for your presence here. But even more important than that, and that's this. During this next 53 minutes, I'm here to serve you. So feel free to pick up that phone. Well, you can pick it up, but you can't dial in. But what you can do is you can send me an email. Send that off to steve@tfnn.com. Inside the subject heading, please put radio show question. Now, of course, if you're inside our Tiger's Den, and you should be, any ping will do. So let's go ahead and get this show started on Fantastic Friday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Well, we got a slew of red out there. Doesn't really show so on my screen, but you can see those minus signs. Dow down minus 381 points. S&P's off 36. NASDAQ 100, 145. Russell 25. 580 for the trannies. 80 points for the semis. Gold is off $12. Silver's down 50 cents. Electric crude is up off $1.54. Natural gas is up 26 cents out there. We were talking about, we're taking a look at, got the different TD9 count patterns that we're taking a look at. We were taking a look at the XLP yesterday, completed that TD9 count pattern. It may get negated today, and all it needs to do is get a close above the high from 2 days ago. That high is 81.58. We're at 81.57 right now. The price closes above that, it negates that signal and tells us about a strong upward momentum move. If we look at the weekly time frame chart, the weekly time frame chart last week closed above profile resistance, is traded above it again this week. That would suggest that the XLP wants to go target the highs from the end of November out there, then in the 83-ish type area out there. Now, if the TD9 count on the daily time frame is going to get negated, the first thing it's got to contend with is the 30-minute time frame. And we look at the 30-minute time frame chart, what we'll see out here is we are in bar number 9 as we speak right now. That means that at 11:30 you'll have a TD9 count in the XLP for its 30-minute time frame, but it will complete that pattern at 12 noon. So you want to watch that. Now, it's going to complete that pattern, whatever the high is between now and 12 noon. If price closes above that high on a 30-minute time frame, it will negate that signal. Add that to what we're looking at on a daily time frame. That will tell you about a very strong upward momentum move inside of the XLP. Otherwise, it's really getting ready to form some type of short-term top in the next hour, pull back, and then we'll maintain or hold that daily TD9 count pattern out there. Natural gas has got a TD9 count signal. We're going to take a look at natural gas in just a few minutes from Mike in New Hampshire, so I'll skip over that. Let's take a look at the we already took a look at the XLP. There's nothing else TD9 count-wise for me to take a look at out here. So let's continue take a look at the equity markets, see what they're doing. Let's start with well, first let's take a look at the daily cash indices out here. If you look at the Dow Jones, it is trading below prior lows out there. There's no support here. It could be targeting 42,927, its breakout level. The ES Mini could be targeting its breakout level. That's at 58.87. The NASDAQ 100 trading below its green oscillator and change line. It can be targeted its breakout level down at 24.36. The Russell 2000 trading below its red oscillator and change line. It's the one that's giving us the most bearish of messages. When I say bearish, just simply about moving lower. May just simply target its Rhodes momentum indicator bottom from back on January the 13th. Semiconductors pulling back. I don't see a topping pattern here per se. It may be just pulling back to 51.81. It's oscillator and change line. The transports are looking pretty bad out here, but they do have support. Let me just open this up. It'll be a little bit easier for you to see. They do have support at this Rhodes Momentum Indicator bottom back on January 3rd out there. The key level to be watching is the 15,732 level. Price close below that. Well, really what price would need to do is close below the low from December 20th. This is a daily time frame chart. That low being 15,677.38. If that were to unfold, it would trigger an A to B equals CD pattern to the downside, that being the transports out there. New York Stock Exchange, been a sideways move, but it looks like it's lost its momentum with price below that oscillator and change line. So that's what's going on. We take a look at the cash indices. Let's take a look at the daily equity future contracts out here. What I want to focus on, or want you to take a look at and focus on, is the bottom panel. The bottom panel shows us consecutive days higher, consecutive days lower. If you look at the ES Mini, you can see coming off of the low that took place in the middle of January, we've seen a couple, two-bar retracements. This will become the third two-bar retracement. Is that the low? Don't know the answer to that question. It most certainly was in the last two. If we take a look at the NQ, it's really the same kind of a setup. If you take a look at coming off the low from January 13th, we've seen two-bar retracements. Today may be that second one. The same is true for the Dow equity future contract. So this is helpful for us to understanding the pattern that is out there. And in these bull markets, you typically get just simply two-bar knee-jerk reaction lows. Don't know if that's what we're in. To help us understand that, what we would do is go take a look at some of the intraday charts. So if we switch over to this set of panels out here, and here I've just focused on the NQ because that's what's pulled up on my screen. But it's where we wanted to focus anyway. So the reason why we wanted to focus here is because it's very clear that the NQ is pulling back to a potential level of support for its daily time frame. That is its buy zone. The buy zone set up by those profiles is between the levels of 21,959 and 22,049. A close below 21,959 would suggest lower price out there. The reason we're watching this is if you look at the 4-hour time frame chart, price is pulling back and it's testing a TD9 count bottom. In order to negate that signal, you need to see a close below 21,951. The current bar itself is going to go ahead and close at 2 p.m., the last one at the end of the trading session. So that would be a number for you to watch. If you did close below that, it would signal that price might want to pull back to its breakout level. That's at 21,753. You've got a 10-minute TD9 count bottom. So for you intraday traders out here, this would be worthwhile to follow. Why? Well, for two reasons. One, you should get a rally up towards its oscillator and change line, maybe center of its profile between 22,045 and 22,067. Price closes above 22,067. Your next battle would be at 22,130, and above that 22,227. So that's to the upside. To the downside, because you've got that completed TD9 count bottom, you're watching this morning's low, or the low of, in the low so far. I'm going to try to give this to you. The low so far is at 21,940.75. Yeah, 75. 21,940.75 out there. So a close below that on a 10-minute basis is going to tell you that, well, that we're likely headed lower. You still got that daily support out there. I don't have any other bottom signals inside of the NQ out there, just that 4-hour time frame and now that 10-minute time frame chart. So you've got the parameters set up with regard to the NQ out here. We come back this week. We've got a few requests that have come in. Let's begin getting to those. Natural gas. We got some general questions from Robert, LDOS, SG, CBGI, UNH, MP, LMZ, LRCX, and AMAT. We'll be right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the Opening Call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
TFNN has launched The Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Welcome back, folks. 608750. That's the number you want to write down if you're trading the ES Mini. That is the TD9 count bottom on its 10-minute time frame. So a close below that would suggest lower price. In the meantime, price out is rally up to 6105. If it can get above 6105, 6119 would be the top of its profile. It's inside a bullish structured profile. Above 6119. You're going to be looking for price to move up to the 61 to 41 level. So I wanted to be able to pass on that ES Mini information to you. Let's go back to the request out here. Let's begin with the request. The first one was to take a look at natural gas. So we've got, where did Stevie put that? I believe it's right here. So we're going to look at it from 2 different perspectives. First, the question here from Mike is more so about seasonally, the long term. And so I've got the continuous contracts out there. So here's what the charts are communicating to us. First, on a daily time frame, you will see, and it doesn't matter if I'm using the March or the April contract right now or the continuous contract, the daily time frame. Profiles would matter, but we're not really discussing profiles at this stage of the game. We're taking a look at really topping patterns or what's being communicated to us by the daily, weekly, and monthly. So the daily time frame is telling us we're getting ready for a timeout, or at least a potential timeout. Today is going to become bar number 9, and Monday will become the bar following bar number 9. So we should see a short-term top that either began yesterday, even though we're rallying yesterday, we haven't taken out yesterday's high, or one that begins on Monday. Regardless of when that unfolds, what price should do is pull back to test at least the first level of support. And right now, that's at oscillator and change line. So that'd be about $3.97 out there. If we look at the weekly time frame chart, unless price just pulls back, gives up all of the week's gains. That is not likely to happen. Of course, anything can happen. It's going to negate a TD9 count pattern. It's going to form an A to B equals CD pattern to the upside. Now, that retracement level is definitely not a 0.618 retracement level, more likely around 0.382. This suggests that natural gas will do more than a 1-to-1 A to B equals CD pattern to the upside. The initial weekly price projection is about $5.15, just like the song from The Who. Now, we take a look at natural gas on a monthly time frame. On a monthly time frame, looks like we may get a profile change in trend. So we've got a bottom signal there. Price is also traded above its TD9 count breakdown level. Oh, no, I'm sorry. Yeah, no, it's traded above its TD9 count breakdown level. That is an accurate statement. I'm just trying to price it $4.23 out there. Again, I'm looking at the continuous contract. We really need to switch over to the April contract to take a look at that. But the point is, on the monthly time frame, you're getting a really nice signal. Now, it's only made a 24% retracement so far, coming off of the high to the low. The high was a Rhodes momentum indicator top. So it ought to make its way up towards the 0.382 retracement of that entire move, and that's at about the $6 level. Remember, the weekly time frame chart has got an A to B equals C that gets you towards the 515-ish level. So how do you break this apart? What this is giving perhaps an opportunity for those of you that would like to take a long trade in natural gas, is going to give you an opportunity to do that, because you're going to get a nice confirmed a pattern on a weekly basis and likely the same confirmed breakout on a monthly time frame. Now, if we take a look at the seasonal pattern here, so let's start here with the seasonal, and I'm going to go to the intraday charts. The seasonal pattern, this is natural gas over the last 34 years. And what you can see is March and April are basically the most favorable seasonal months of the year for natural gas. So we're beginning to get into that favorable seasonal time period. That basically says you should get a top around the middle of May or the middle of April out there. So you're in a favorable time period. Now we just go switch over and take a look at the actual, I'm not sure if I've got the March contract or the April contract, which we're rolling over into, but let's go find out what it, or you know what, I don't have anything. That's what it is. It's because we've got the ES Mini up here. But let's go put natural gas. Because we're rolling, I'm going to put the April contract up here first. Let's take a look at it, see what kind of signals we're looking at there. But I think, Mike, I'm hoping that provided you with the information that you were looking for out there. Here on an April contract, I just simply want to be able to take a look at that daily time frame. So here is the level where price would likely pull back to. Right now, it's at about $3.88. That's the daily oscillator and change line. Below that would be profile support. So in lieu of any other profile that forms, that would be at about the 341 level out there. As far as intraday out here, what do we see? I see a not much. I see a TD9 count top on the 240. That's being tested. That required, the 5-hour TD9 count. That's the one. In order for price to really get moving to the upside, it's got to see it close above $4.34 out there. That's its TD9 count top that took place at 4 o'clock in the morning, and that was yesterday morning, not this morning out there. So that's what's going on with regard to natural gas. Hope that helps you out, Mike. And as always, thanks so much for taking the time to write in. Robert, also, thank you for taking the time to write in. You've got some general questions about the market. Now, I don't have my black background system up, and you were asking about the advanced decline line. I don't have the advanced decline line up on my white background system. What I can tell you is we made a new all-time high weeks ago. We started to get up towards that level. What I can do, or what I do have on my screen, though, is the advanced decline oscillator. Now, that's taking the advanced decline line information. It's not going to be that easy for me to just open that up. But it taking the advanced decline information, it's looking at the difference between the 19 and the 39 period exponential moving average. That oscillator then, right now we are trading below the zero threshold level. The zero threshold level, we're trading at minus 34. That's a signal that sellers are trying to take control of the market. You need 2 consecutive closes below that zero threshold level, at least to get that message. Now, even though let's say we are in the hands of, because we're trading below that, we're in the hands of sellers, so to speak, you won't see any significant moves to the downside. Really significant moves to the downside, unless you see the spot VIX index trade above its 50-day exponential moving average. You were also asking about the VIX. So here's how we tie this together. The VIX, the 50-day exponential moving average for the VIX is that gold line on my chart. That's at 1630. So that is below the 50-day. That provides an edge for buyers. The New York Stock Exchange advanced decline oscillator is trying to provide an edge for sellers out there. It is that class that kind of neutralizes things. Now, the ideal condition for a market to move lower, you'd have that advanced decline oscillator below the zero threshold level, combined with the spot VIX index trading above the 50-day exponential moving average. Those are not conditions that we have in place right now. So I hope that answered your general questions, but if you would be kind enough to write back, if it didn't, let me know what else you've got, and I'll most certainly be happy to at least attempt to address that. Roger in Boulder, Colorado wants to take a look at LDOS. So let's get that up on my system here. Give me a moment. We'll pull up that. That should be this chart right here. an LDOS. I believe you were looking for an entry point, if I'm not mistaken. Now, on a daily time frame, you have wave number 7. That's letter G. That's courtesy of Basil Chapman. I believe he's in the land down under. And you have a bar number 8 of a TD9 count. So the daily time frame says that this is potentially bottoming sometime between today and Tuesday of next week. Now, that bottom may only rally up towards its oscillator and change line. In other words, it may only be a counter trend move. And that counter trend move would take you up towards the 130, 138 level. Why would you say that, Steve, that it's only a counter trend move? The reason I would is because then I go take a look at what's going on the weekly time frame. And on the weekly time frame, looks like we have an A to B equals CD pattern that's in play. Has this been confirmed by volume? Well, the B point on this would be the swing point from December 20th. That had 9 million shares. 9.1 million shares, and it was passed with 11.3. So the weekly chart says longer term, intermediate term, that is, there's an A to B equals CD pattern to the downside. Steve Rhodes with TFNN. We'll be right back.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
This year has already been a wild ride for the market. We started off heavily in the red, reversed back to all-time highs, and we now have a trade war looming. Trying to play this chop as an individual trader leads to death by 1,000 cuts. Where does this market go next? Should I add to this position or cut my losses? Where is the next opportunity? Tariffs, trade wars, analysis paralysis. Don't become a victim of this intense market. Instead, join Larry Pesavento for the second and fourth Friday of every month for 3 hours of live trading. Larry has been through many markets just like this one, and the insight he provides is invaluable. The dates for this month are February 14th and 28th, 9 a.m. to noon Eastern Time. Get in here and let's start trading. TFNN, educating investors.
This portion of the Trader's Edge is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, folks. When we left, we were taking a ticker symbol LDOS. This is for Roger in Boulder. I think he's looking for a bottom. We've identified that it's going to form, or is likely to form, a daily bottom, but we're thinking that's only going to be a counter trend rally out there because of now the confirmed A to B equals CD pattern to the downside on a weekly time frame, with price also trading below any kind of support levels out there. So that wants to go target the $100 area. If you look at the monthly time frame, there's a new profile that formed last month. The bottom of that profile is at the 145.03 level. We're well below that. We closed below it last month out there. This suggesting that price might want to go target 87.61. So I'm not suggesting here that you take a long trade based upon the daily bottoming signals. In fact, I'm suggesting you wait as this gets down towards that $100 type level out there. Let's take a look at SG. Roger wanted to look at SG. That is negating a TD9 count bottom pattern on a daily time frame. So that has probably A to B equals CDs, probably several of them. There's at least one, and I can see that that has at least made the one-to-one price projection. Let's go take a quick peek here. It looks like it has. I'm just simply going to move this over. Just to try to move this over. Come on. Work with Stevie, would you? There we go. So here's your A to B equals CD pattern downside. No, it's got a little bit lower to go to get to that one-to-one level. So you're looking for price to get down towards the 2160 area, Roger. It doesn't have to be right there. It can be lower. It can't be really higher. And then wait for a bullish reversal candle to form to generate a buy the D point pattern. And you'd want to do that because the weekly time frame chart says that this week is going to complete a TD9 count bottom. Now, the beauty there is, and I don't know if the low is in for the week, but if it were, the low right now is 22.78. If price starts trading below that next week out there, it certainly closes on Friday below that, then that tells you we got lower price coming at us. And the monthly chart price is trading below profile support, 24.04. So this instrument also suggests a bit of caution out there, but you're going to get that weekly TD9 count. So watch for a daily buy the D point pattern out there. Brent wants to take a look at CVGI. So let's pull that up here, see what we can find in this. Now, CVGI on a daily time frame confirmed a Rhodes momentum indicator bottom pattern. It did it on the trading session here, Brent, of February the 13th. Was that Friday the 13th? No, I think Valentine's Day was last Friday. So it was Thursday the 13th. And right now, this is on a daily basis, is trying to set up an A to B equals CD pattern to the upside. It'll accomplish that task with a close above $2.15. We're at $2.13 right now. So close above $2.15, sets up an A to B equals CD. You've got another resistance level, which is at $2.23. That is its daily TD9 count breakdown resistance area. Now, if the week were to end right now, that's 11:33 a.m., we would say that the weekly time frame chart has now a confirmed Rhodes momentum indicator bottom. Why would we say that? We would say that because we've got a bullish hammer candle that would confirm that pattern. What I don't know is what price is going to look like at day's end, and I don't know what that candle is going to look like at day's end. But you know what you're looking at right now, Brent, and you know what a hammer candle looks like, so you go on and watch for that. Now, you put that together with the monthly chart that is going to go ahead and confirm a TD9 count bottom this month. It completes it next month. If we take a look at the last high that came out here, that was a TD9 count high. But we can also take a look at a TD9 count bottom that formed the week of June, in June of 2024, and that was negated 2 months later. So these patterns can fail. But I like the setup here. The setup of a monthly TD9 count bottom pattern, a weekly potential Rhodes momentum indicator bottom pattern, and a Rhodes momentum indicator bottom pattern on the daily time frame. Now, I think you were looking at A to B equals CD patterns. If I'm not mistaken, that would lead to lower price. I think these other patterns here are kind of saying you don't necessarily need to look at that A to B equals CD pattern. Too much on the monthly, weekly, and daily. But if you can remind me, and I'll try to put it on my chart here, but I can't guarantee that I'll remember. But we do want to go take a CVGI come Monday out there. So, Brent, thanks for writing in, and have a fabulous weekend out there. Mr. Bill wants to get United Health, UNH, which is getting just clobbered, or had been getting clobbered. No, that's FXI. So where did I put where did that come from? That would have been a yesterday call. MP, I'm going to have to come back to UNH, Mr. Bill. Let's take a look at MP out here. MP is consolidating with inside its daily profile. That's after having formed a TD9 count top. Support is down at 2267. Resistance at 2480. On a weekly time frame, I don't have any kind of a topping pattern. Last week is resistance because it was a bearish shooting star candle formation, but it didn't complete an A to B equals CD pattern or anything like that. So it still wants that higher, but yeah, last week's high, well, let me give that to you, is still a resistance point. Not a topping point, but a resistance point. 26 even Steven out there. Maybe Basil would say, no, that's maybe a top, but even round number high out there. If we take a look at the monthly time frame chart, price is trading above profile support, above its oscillator and change line. So you get a consolidation on the daily time frame. Weekly and monthly say they want higher price out there. That's what we see when we take a look at MP, and that was for Fletch. Now, do I have anything else set up here? Let's find out. We got LMT, and this is for Bogart Dog inside the Tiger's Den. We look at these charts here. So the monthly chart is beginning to trade below profile support here. It's a bullish structured profile. So at month's end, you want to be watching that 443.50 level. If you close below that, it's hinting at lower price. The weekly chart is doing more than hinting. Weekly chart is saying, I want lower price. Now, it took out a swing point, a B point, of an A to B equals CD. That was the week of January 10th. There was 5.1 million shares that week. When it was passed, it was 6.4. So the weekly chart for LMT has confirmed an A to B equals CD pattern to the downside. That price projection, let's put in the A to B level out there, and let's just move that A to B over to that C point. Give me a moment. Let's grab it. That looks like that's hold on. There we go. So now our A to B equals CD for LMT. That says that this likely wants to target the 350-ish type area out there. Just a ballpark. Don't quote me to that number or anything like that. You can do the A to B equals CD pattern on your set of charts out there. And on a daily time frame, we've got a negated TD9 count bottom. So what's going on right now, it would appear to Stevie that what's going on right now is nothing more than just simply a counter trend move with price trading with inside his profile that may go up and target the 451.80 level. I would say that today is more likely to be the last day of that rally because it's a fourth consecutive day higher out there. Once you get to 5 and 6, it can tell you about a change in trend. And we're not seeing that change in trend, certainly on the monthly or the weekly time frame out there. So that's what we see. We take a look at LMT, and I hope that helps you out. We're just about to go to a break out there, and that's perfect because now I can start putting in those other requests out there. So we'll be back in just a few. We're going to look at United Health, LRCX for Duncan, AMAT, KWeb, RKLB, the gold contract, PPTA, OKLO, and FTCO. Be interesting to see if I can get all those in. I'm going to do my best. I'll be right back.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstad's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstad releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. If you give me just a moment, we'll take a look at the charts here for United Health. UNH is the ticker symbol, getting a crash today, negating the daily TD9 count bottom pattern, closing below it appears the weekly TD9 count breakout level, maybe forming a weekly A to B equals CD pattern to the downside. Let's check into that. The weekly swing point that we're looking at was from December 20th. 51 million shares traded hands that week. So far this week, we're at 28 million. So it's taking that swing point out with light volume. That could be setting up a Gartley sell pattern out there. We are also getting back, though, to a level of support. So that level of support, here's a swing point that is testing from April the 12th. That had 24 million shares. Now we're testing that with volume, 28 million shares so far. So this level may hold. The level that I'm referring to is 436.38. But we're testing that with volume. We're likely to test that level at least again. Watch that area, because a close below that, then I'd say that A to B equals CD pattern that we're looking at out there would come to fruition. If we take a look at the monthly time frame chart, you've got prices testing. It's trading just below, but it's a buy zone. And the buy zone for United Health is between 460 and 483 out there. So the daily looks horrible. Weekly says, well, I'm really back at my support level. Now, if that support level fails to hold price, we would be looking at a move back towards 380, 312. So that's what I see on the charts there, Mr. Bill, for United Health. Hope that helps you out. As always, thanks so much for your requests. The next request was to take a look at LRC. This is for Duncan Steve. LRCX says in a bullish breakout mode on the daily time frame. I see no topping pattern out there. We are trading below yesterday's low, so maybe it's going to pull back to test support. Support would be $85.78 out there. On a weekly time frame, I see no, it's in breakout mode here. What I mean by that is prices trading above profile resistance and its oscillator and change line. And finally, we look at the monthly time frame. Price is trying to get back inside its profile. In order to accomplish that task, it needs to close above a 61.70. Now that can't be. Oh, wait, it's trading into its sell zone. Okay, wake up, Stevie. Open those eyes of yours. So what LRCX is doing here, Dunk, it's trading into the sell zone. And the sell zone is between the range of 87.75 and 96.41. So it's going to get a bit choppy out there, but the daily says I want higher price. The weekly says I want higher price. Yes, you're pulling back today and maybe in sympathy of the market out there. And it may pull back just simply to test that oscillator and change line. And that's at 85.77. So hope that helps you out there. Dunk, let's go take your next request, which was AMAT. We take a look at America. I think this is American Tower. It's trading below support, both profile and its oscillator and change line, without any kind of a bottom pattern out there. In fact, on a daily basis, it may have confirmed an A to B equals CD pattern. Let's check it out. The swing point of January 28th, volume of 7.4 million shares, was passed and closed below with 12 million shares. It most certainly does have a confirmed A to B equals CD pattern to the downside. You can type that in on your screen out there. I'm looking at the weekly time frame. I'm really trying to also get through all of these requests out there. I think I got a little bit behind. On a weekly time frame, you've got a consolidation with inside its profile. First level of support, or the level of support, is 165.81. Resistance up at 179.50. And on a monthly basis, you are trading below profile support. So it's really the weekly that's keeping things in check right now. But you do have that A to B equals CD pattern to the downside. Let me go ahead and draw it in here. Let me at least draw an A to B and move this over to the, that didn't do it. Let's try this right here. It's down the bottom right there. And that's, there we go. So that A to B equals CD gives a 1-to-1 price projection. That takes us back towards the 156 level. 165 bottom of the weekly profile. So I'd say that's what's in place right now with regard to AMAT. Dunk, hope that helps you out. And as always, thanks for your request. Jambalaya wants to take a look at KWEB, KWEB out there. I believe that's a Chinese internet service. That has a TD9 count pattern, TD9 count top, that is likely to be negated today. All it needs to do is close above 36.71. We're trading at 37.06. That being the case, that would tell you about a strong upward momentum move to the upside there, Jam. And where that would take us to, I would say, would be the top of its weekly profile. It is a bullish structured weekly profile. We're trading above the center line of that. So the daily says I'm going to negate. Now, it needs to close above it. It again being yesterday's high. So it still has to accomplish task number one to close above 36.71. And if it does that, then you're off to the 39.17. If it doesn't, then that's held and price is going to pull back to 34.75 or 34.14. The monthly chart's starting to look very nice here. It is trading above profile resistance at 36.27. So if we can close above that at month end, that would be another bullish signal out there. So KWEB, at least as of 11:47, is looking muy bueno out there, but it still does have to close above that high. You had a next request out here, which was a look at Rocket Labs, RKLB. Now, Rocket Labs is pulling back into its buy zone on its daily time frame, and that buy zone is between 24.10 and 24.79 out there. That's the daily time frame. Let's populate this weekly chart out here, see what kind of signals we have. We just have price right now trying to get back inside his profile. It looks like it'll do that. On a weekly basis, it's testing a little junior swing point from January 17th. 72 million shares traded that week. This week we're at 68, so we're coming back with similar type volume. On a monthly basis, this will confirm a TD9 count top this month. It'll complete it next month. So what you're really watching for here, I would say, in Rocket Labs is 24.10. Now there's an A to B equals CD pattern that looks like it may have already or is getting close to completing the 1-to-1 area. I'm just going to move that B point over to the C level. Yeah, so it's the A to B equals CD in essence has been completed. It was completed it's completed yesterday. When I say I'm sorry. It completed from the standpoint of attaining the 1-to-1 price objective. So it can go much lower. You're looking for a bullish reversal candle here, though. Rocket Labs, Jambalaya, if you get that, that would be your buy signal out there. Let's go take the gold contract out there. Oh, we've gone through those pretty quickly. If we take a look at gold, daily, weekly, and monthly, this for Ron R. Ron, not a lot has changed out here with regard to gold. I know that the GDX is getting hammered, but or at least it was earlier, but the gold contract, not so much. Has a TD9 count top, but it's still in place. It's led to a sideways move. A close above the trading day of February 11th, that would be 29.6850, negates that signal. A close above last week's high today, that being 29.6850, would negate its weekly Rhodes Momentum Indicator top, and on the monthly, you're still in bar number 8 out there. So gold is looking really strong. It's been holding that oscillator and change line. The oscillator and change line, as we speak right now, 29.48 is the level out there. So that's what we've got with regard to gold, daily, weekly, and monthly. Let's go take a look at PPTA. Let's go type that in here because now we've run out of what I was able to do. This is going to be for LB. So let's get this populated, see what it's going to, unfortunately, it's going to take a few moments here for this to populate. We can't see on the daily time frame. It's in bar number 9. So LB, you're going to get a confirmed TD9 count bottom today. You're going to complete that bottom pattern on Monday. The weekly chart right now is trading below profile support at 906. Not ideal. The monthly chart which has a TD9 count top, is pointing right back to its breakout level. So this has got potential. When I say it's got potential, that breakout level, or the oscillator and change line, I should say, for the monthly chart is 847. So that's your support level. So maybe what this is telling us, is a close below the weekly profile is going to be a false move to the downside. You're going to find out pretty soon here because that monthly chart, we like that setup with the TD9 count getting back to support, and now a daily TD9 count pattern going to form today and will complete on Monday. Steve Rhodes with TFNN. We'll be right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento, a pros pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Welcome back, folks. We're taking a look at ticker symbol OKLO, Oklo. It is trading below profile support, 42.39. So it closed below that. LB today is going to suggest we may see lower price. Now, that lower price might only take us to 38.35. That's the weekly oscillator and change line. The weekly chart is going to confirm a sell the D point top out there. So you want to watch that 38.35-ish area. As a close below that would suggest lower price. Lower price for it would be down to $26 right now. That happens to be the top of its weekly profile. Monthly chart, no reason to really review that as we speak. This would be 5 consecutive days to the downside. I did have 5 consecutive days to the downside before, and then it started to rally. Although at that stage, I don't know if we were below profile support like we are now. FTCO is what Marty would like to take a look at. So let's get over to that set of charts out here. Should be right here. FTCO, Marty, it is consolidated with inside its daily profile. That range is between 536 at support and 555 as resistance. So you've tested both sides this week out there, so you got a good old-fashioned consolidation. Weekly time frame chart is attempting to close above the top of its weekly profile. In order to do that, it needs a close above $5.45. We're at $5.46. The monthly chart has got resistance at $5.59. So you got all this kind of resistance in the $5.55, $5.46, $5.59 level. So that's what price has got to clear in order for FTCO to start motoring to the upside. You're up the top of its consolidation. Lastly, YOY wanted to take a look at the TMF out here. Now, I believe this is a 3X for the 30-year Treasury. So really, I should look at the 30-year Treasury. We're seeing that this is trade above profile. It's rallying today, but does that rally mean anything? Well, if we take a look at the daily time frame for the 30-year Treasury for March T-bonds out here, we can see that we are trading above the top of its bearish structured profile, 115.01. So a close above that, we should at least get to the high from February 14th. That's at 115.30, or maybe we get to the high from February 7th up at the 117.01 level. We got through them all, folks. That's a beautiful thing. Have a fabulous, wonderful weekend. Have a fabulous Friday, and I'll look forward to seeing you at 11 o'clock a.m. on Monday. Thanks so much for your support. Take care. Be safe out there.